3M rose more than 5% Tuesday after the company's fourth quarter results and 2025 profit forecast beat Wall Street estimates. CEO Bill Brown, on the job less than a year, has looked to improve sales at the industrial conglomerate by developing new products while also cutting supply chain costs. As a result, 3M, perhaps best known for its Scotch tape, expects 2025 organic sales to grow between 2 to 3%, which one analyst called a win for investors. The company, which is based in St. Paul, Minnesota, also reported a 44% drop in operating expenses in 2024 from a year earlier. Upbeat results in recent quarters reflect a turnaround from 2023, when 3M suffered a slump in consumer demand due to high inflation and a weak market in China. That led to 8,500 job cuts, a 12% reduction in office space, and a spin-off of its healthcare business into a publicly listed company, Solventum.
U.S. President Donald Trump's tariff plans would mean higher car prices for U.S. consumers and hit global automakers. A warning from Germany's powerful car industry on Tuesday. It came as auto stocks fell on the prospect of higher U.S. import duties. The president of Germany's VDA Auto Association told an annual press conference that Trump's threatened tariffs would drive up U.S. inflation. Trump did not immediately implement the wide range of tariffs he'd promised, but he indicated that tariffs of 25% on Canada and Mexico could be imposed as early as February. Global automakers make cars in Mexico for sale in the U.S., and the Central American country is an integral part of the supply chain. Russ Mould is investment director at AJ Bell.
If you look at a lot of the Mexican trade flow that there is, this is equipment or major bits of machinery that are shipped backwards and forwards across the border several times during assembly. So if that tariff applies every single time, then that's going to be a really expensive piece of kit by the time that we finish. So companies may well feel obliged to move more production to the United States, and that's actually what President Trump wants.
In Asia, the threat hit shares of Honda, Mazda, Hyundai and Kia, which all produce vehicles in Mexico. And in Europe, Volkswagen and Stellantis, who would be particularly vulnerable to tariffs, saw their shares fall too. VW, the world's second largest automaker, said it was concerned about the harmful economic impact of tariffs. The company highlighted planned investments exceeding $10 billion in the US. Automakers had been negotiating with Trump's team ahead of his inauguration. Sources say Stellantis chairman John Elkman spent 4 days in Washington meeting with Trump and top administration officials. VW was also reportedly in close contact with the Trump administration over tariffs.
Netflix just enjoyed a blockbuster quarter thanks to the return of hit shows like South Korean drama Squid Game. The streaming giant said Tuesday that subscriber numbers hit a record over the holiday period. They jumped by nearly 19 million to almost 302 million in total. That beat forecasts, as did figures for profit and sales. Live events also played a big part in the success. That included a fight between former boxing champion Mike Tyson and YouTuber Jake Paul. The bout pulled in some 65 million streams. Netflix also showed 2 NFL games on Christmas Day, with both among the most streamed competitions in the league's history. Now it's doubling down on live events, with plans to stream more WWE wrestling matches and a deal to show the FIFA Women's World Cup soccer finals in 2027 and 2031. Investors reacted enthusiastically to Netflix's latest numbers. Its shares jumped about 13% in extended US trade, lifting its stock market value by almost $50 billion. The company has sought to capitalize on its popularity by raising prices in the US, Canada and some other markets. Its cheapest ad-supported tier went up in price by $1 per month in the US. Analysts say the numbers are evidence that the company is dominating rivals. One told Reuters that Netflix was running away with the streaming market.
Wall Street's main indexes closed higher on Tuesday as investors assessed Donald Trump's first actions as U.S. president and appeared encouraged he didn't kick off his second term with blanket tariff increases. The Dow gained about 1.25%, the S&P 500 added almost 0.9%, and the Nasdaq climbed more than 0.6%. While markets remain cautious about tariffs, investor optimism is high, said Robert Conzo, CEO and managing director of the Wealth Alliance.
I think there's just a very strong positive feeling coming off of that inaugural address. And the positive feeling drives around earnings and corporate CEOs lining up behind Trump saying, let's get on the Trump train. And you saw that during the inauguration. You saw some of the heads of industry literally sitting by his family. CEOs are on board for the most part with Trump. That's good for those companies, most likely. And as such, that may be good for the market.
After the close, shares of Netflix, which gained in Tuesday's session, surged in extended trading after the streaming giant added nearly 19 million subscribers in its holiday quarter, blowing past Wall Street's forecasts. Other stocks on the move Tuesday included 3M, which rallied more than 4% after reporting upbeat fourth-quarter results. Utilities got a lift from nuclear power stocks, including Vistra Corp and NRG Energy, after Trump issued a flurry of orders intended to boost energy production. Shares of automakers rose. They're most sensitive to tariffs due to their vast supply chains. Ford added 2.5%, while General Motors gained 5.7% after a rating upgrade from Deutsche Bank. On the flip side, heavyweight Apple was the S&P 500's biggest drag, losing more than 3% after brokerage Jefferies cut its rating to underperform.
EasyJet enjoyed strong demand for travel and its holiday packages in the first quarter. That and easing fuel costs saw the British airline report a smaller operating loss for the period on Wednesday. It posted a loss of $49.27 million for the 3 months to December 31st. That was against a loss of $144 million a year earlier. New CEO Kenton Jarvis said EasyJet sees continuing demand for flights and holidays in the upcoming summer. European airlines are hoping stable fuel prices and demand will help their performance this year, after they endured spiralling costs and geopolitical turmoil in 2024. European airline shares are broadly down on the year. Investors weren't too impressed by EasyJet's Wednesday report, though. Shares were down by almost 5% in early trade. Analysts pointed to slightly weaker than expected second quarter revenue outlook, though the summer remains positive.